Hi, I am Dr. K. Rani, Assistant Professor, Department of Commerce, Dr. SNS Rajalakshmi College of Arts and Science. My subject name is Applied Cost Accounting. My topic name is Methods of Costing. First of all, what is costing? Costing method encompasses the spectrum of technique including cost accounting, process costing, ABC costing, marginal costing and so on. This method offers business invaluable insight into their cost structure, enabling strategy of decision making, research optimization and enhance profitability in today's dynamic business landscape. Understanding these methods empower business to negative cost complexity and drive sustainable growth. Methods of cost accounting: job costing, process costing, activity based costing, marginal costing, standard costing, lifestyle costing, target costing, learn costing, observation costing, uniform costing, historical costing, differential costing, opportunity costing, direct costing, indirect costing, full costing, variable costing, fixed costing, activity based management. Job costing. Job costing is a method of costing used to determine the cost of producing a specific product, service or project. It involves tracking the direct and indirect cost associated with individual job or project, such as labor, material and overheads, and allocation this cost accordingly. Process costing. Process costing is a costing method used to find the cost of producing homogeneous product or continuous base. It involves average the cost incurred across all units produced with a specific production process or department. Activity based costing. ABC is a costing method that identifies the cost derives of various activities within an organization and allocation indirect cost based on their consumption. Marginal costing. Marginal costing is a costing technique where only variable costs are considered in determining the cost of processing one additional unit. Fixed costs are treated as per unit and are not allocated to products. Standard costing. Standard costing is a costing method that establishes predetermined cost for material, labor and overhead, which serve as benchmark for evaluating actual cost. It involves comparing actual cost with standard cost to identify various and assess operational efficiency, aiding in performance evaluation, cost control and decision making. Life cycle costing. The life cycle costing is a comprehensive costing appropriate to consider all cost allocation with a product or product through entry lifestyle for conceptual disposal. Target costing. Target costing is a proactive cost management technique used during the product development phase where a desired selling price is determined based on market condition and desired profit margin. Learn accounting. Learn accounting is a accounting approach aligned with learn principle. The focus on providing financial information that support continuous improvement and waste reduction effort within the organization. Approach costing. Approach costing is method of allocation. All manufacturing costs include both variable and fixed cost to unit of production. Throughput costing. Throughput costing is a method of costing that focuses solely on the direct material cost of production, excluding other costs such as direct and overheads. Uniform costing. Uniform costing is a standardized costing system adopted by multiple firms within the same industry to facilitate comparison and benchmark. Historical costing. Historical costing is a method of value asset and liability based on their original purchase or acquisition cost. It record transaction at the original nominal value without adjustment for inflation or change in market value over time. Differential costing. Differential costing is a technique that analyzes the difference in cost between alternative course of action. It focuses on identifying the incremental cost and benefit allocation with choosing one option over another. Opportunity costing. Opportunity costing is the concept of assessing the potential benefit that lost when one alternative is chosen over costing. Direct costing, also variable costing, is method of cost accounting that consider only variable costing as a product cost. Indirect costing, known as observation costing, allocate both variable and fixed manufacture cost to product. Full costing, also known as observation costing, involving allocation all manufacture costs, include both variable and fixed cost to unit of production. Variable cost. Variable costing, also known as direct costing, consider only variable cost as product cost, while fixed costs are treated as period expenses. Fixed costing, widely recognized term accounting costing method. However, if you refer to a method the focus slowly on allocating fixed cost to product or service, it is not a common approach because fixed costs are typically treated as period expenses and are not allocated to individual unit under most costing methods. Thank you.